Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at Nuburu.
If you find our talks useful, please consider subscribe, like, and comment underneath.
So we are looking at a company that it really sits at a fascinating intersection of heavy industry, advanced physics, and maybe even the future of warfare.
That is quite the mix. Usually when we talk lasers, it's either, something you use to play with a cat or some giant sci-fi weapon. But Nuburu seems to be doing something different. The ticker is BURU.
It is?
And looking at the chart, it's been a wild ride. But before we get to the numbers, we have to understand what this thing actually is. What makes this different from all the other laser companies out there?
It creates a lot of confusion, yeah. Most people know the big industrial players like IPG Photonics. But the differentiator here is very simple to say, but incredibly hard to do.
Okay.
It's the color. Nuburu specializes in high-power, 415 nanometer blue laser technology.
Blue. Okay, I have to jump in and play the skeptic right away. Is this just marketing? I mean, does the color of the beam actually change anything, or is it just for looks?
It changes everything. It's not an aesthetic choice at all. It's pure physics. Think about the materials that are, defining the modern economy.
Copper, aluminum.
Exactly. Copper, aluminum, even gold. These are all yellow metals.
And copper is just everywhere now. Wiring, batteries, EVs, you name it.
It is. Now, for the last 30 years or so, the industry standard has been infrared lasers. But here's the problem. If you shine an infrared laser at a piece of copper, what happens?
I'm going to guess it gets hot.
Eventually. But first, it basically acts like a mirror.
It reflects it.
It just bounces off. So if you're a manufacturer trying to weld a tiny copper tab onto an EV battery, you are literally fighting physics. You have to blast that copper with a huge amount of infrared power just to overcome that reflectivity.
That just sounds really inefficient.
It's worse than inefficient. It's messy. It's like trying to hammer a nail into a wall while you're standing on a sheet of ice. You're slipping, you're wasting energy. And in welding, that creates something called spatter.
Spatter?
Yeah, you get little bubbles, voids, inconsistent connections.
If I'm driving an electric car, inconsistent connections in my battery pack are two words I really don't want to hear.
Precisely. Spatter can lead to shorts, and shorts can lead to fires. Now, enter the blue laser. The physics of it just work out so that copper absorbs blue light about 13 times better than it absorbs infrared.
13 times. Okay, hold on. That's not a small margin. That is a fundamental difference.
It is night and day. Going back to the analogy, if infrared is walking on ice, the blue laser is like walking on dry pavement. The copper just soaks up the energy instantly.
Wow.
You can weld faster with less power, and this is the crucial part, with zero spatter.
So if the fifth thing are this obvious, if blue is so clearly the superior tool for this job, why hasn't everyone been doing this for the last 20 years? Why is it Nuburu that's making headlines now?
That is the million-dollar question, right?
Yeah.
The theory was always there. The engineering was the absolute nightmare.
Ah.
Getting a blue diode to output that much power without, burning itself out or becoming unstable was a massive, massive hurdle. It took over a decade of R&D to stabilize this tech at an industrial scale.
So that's the moat around the company.
That is the moat. They hold the foundational IP for high-power blue lasers. It's not just that they're the best at it. In this high-power class, they are pretty much the only ones doing it this way.
So they have a monopoly on the physics of welding copper efficiently. That should be a license to print money. But, and this is a very big but, we have to look at the business reality.
Of course.
Because if I look at this stock chart, it does not look like a company that's printing money. It looks like a company that's been, frankly, struggling.
It has been a rough road, absolutely. Great technology doesn't always equal a great stock, at least not right away. But we're looking at it today because of a very specific signal.
The turnaround signal.
I think so. You're talking about the reactivation news.
Yes, the big announcement. A production ramp for 40 high-power blue laser systems.
Exactly.
Okay, let's unpack this. 40 systems. And the immediate contract value is what, about $850,000? Now, I have to be the bad guy here. For a public company, $850,000 is, well, it's not a lot of money.
It's a rounding error on a big balance sheet. I get it.
It's the price of a nice house in the suburbs. Why should any investor care about a contract that small?
If you only look at that headline number, you completely miss the forest for the trees. You have to look at the context. First, the timeline. This contract kicks in Q1 2026.
We're a little ways out.
Right, but it signals that the factory lines are turning back on. For a company like this, activity is the single most important metric. But more importantly, you have to look at what this contract represents.
Which is?
It's a key. The source material we looked at implies there's an $850 million scale opportunity that this specific contract services.
Whoa, slow down. We just jumped from 850,000 to 850 million. That's a 1,000x multiplier. How do we get there? Is that real, or is that just some corporate math?
It's not cash in the bank tomorrow, to be clear. It's the total addressable scope of the partnership.
Okay.
Think of this first batch of 40 lasers as the pilot episode for a TV show. The network, the customer, pays a small amount to film the pilot. If that pilot works, if these 40 lasers perform as expected on the line,
It unlocks the full series order.
it unlocks the series order. And that is the $850 million opportunity.
I see. So the $850,000 is the test. It's the proof of concept in the real world.
Exactly. It validates the tech in a high-volume environment. If they deliver in Q1 2026, the door swings wide open for mass adoption across that customer's entire manufacturing ecosystem. That is why it's a catalyst.
It shifts the question from, is this company dead,
Yeah.
to, can they actually execute?
That's the whole game now, execution.
Okay, so the potential is massive, but to get to Q1 2026, you have to survive today. And this brings us to the elephant in the room, the stock price. It recently gapped all the way down to around 10 cents. I mean, if you were holding this stock at 50 cents, you just took a massive haircut. What on earth happened?
The cause was a $12 million public offering.
Dilution. The word every single shareholder hates to hear.
It is painful. There's no way to sugarcoat it. They sold 58 million shares at $11. When you flood the market with that much supply, the price has to drop to meet it. It just crushed the share price in the short term.
It feels like a punishment, right? The company says, hey, we have great news, we have a contract, and then, oh, by the way, your shares are worth less now. Why did they do this?
Because you can't build lasers with good intentions. You need cash. And they didn't raise that $12 million to, pay for a corporate retreat. They raised it specifically to fund the production of those 40 units we just talked about.
So it's a bridge to get to that contract.
It's survival fuel. Without that $12 million, they couldn't buy the raw materials. They couldn't pay the labor to fulfill that Q1 contract. And if they don't fulfill the contract,
The $850 million opportunity just vanishes.
it goes up in smoke. So, while the dilution hurts like hell for current holders, it was a necessary evil to keep that long-term play alive.
The classic spend money to make money situation. So let's look at the balance sheet now that the dust has settled. Are they safe? Or are they going to be back hat in hand in 3 months?
In the microcap world, safe is always a relative term. But the market cap is hovering around $60 million. Their debt load is manageable. Sources point to a beta of 0.54, which suggests they aren't, behaving widely compared to the market.
And the money's going to the right place.
And crucially, yes, the funds are strictly earmarked for growth, manufacturing, and a big push into defense expansion.
You mentioned defense. I think for a lot of people, this is going to be the aha moment. We were talking about welding batteries, which is important, but, maybe a little dry.
A little giant.
But Nuburu is pivoting into military tech, and they are doing it alone.
No, they are not. And this is where the story gets really, really interesting. Nuburu has a strategic equity position related to Heckler & Co.
Heckler & Co., the firearms manufacturer, the guys who make rifles for special forces.
The very same.
That seems odd. Is a laser welding company trying to buy a gun company? Or are they putting welding lasers on rifles? What is the actual connection here?
It's neither of those. It's about alignment. This holding aligns Nuburu with the supply chain of one of the biggest defense contractors in the world. And no, they aren't welding rifles. They're moving into something called non-kinetic effects.
Okay, non-kinetic. I hear that term thrown around a lot. Translate that for us.
Sure. Kinetic energy is a bullet or a missile. It hits something, it explodes, it destroys through impact. Non-kinetic is directed energy. It achieves an effect without a physical projectile.
Lasers?
Lasers, specifically optical dazzling and sensor denial.
Dazzling. It sounds like a magic trick.
It's a very effective magic trick if you happen to be a drone. Imagine a swarm of drones attacking a military convoy. This is the biggest threat in modern warfare right now. We see it everywhere.
Right, these cheap little drones carrying explosives.
Exactly. Now, how do you stop a $500 drone? If you shoot a Patriot missile at it, you just spent $2 million to stop a $500 toy. You'll go bankrupt winning that battle.
You can't sustain that economically.
You can't. That is the asymmetry of modern war. But enter the high-power blue laser. Because blue light scatters less and focuses more intensely than other wavelengths, it is incredibly effective at blinding the optical sensors on those drones.
So you just blind it.
You hit the camera with a blue beam, the sensor either fries or gets confused, and the drone just falls out of the sky.
And the cost per shot?
Pennies. The cost of electricity.
That completely changes the math of warfare.
It flips the entire script. By partnering with a giant like Heckler and Koch, and with some speculative talks about other partners like Techne, Nuburu is positioning itself to be the engine inside these future defense systems. They aren't just a welding company anymore.
No, they're a defense technology play. That is a massive pivot. It's going from we help you build cars to we help you stop drone swarms.
And the defense budgets for this kind of tech are just exploding. Every nation in NATO is desperate for a solution to the drone problem. Nuburu's blue laser might just be that solution.
So we have this transformative technology in two huge sectors, EVs and defense. We have a contract that restarts the engine, but we have a stock chart that looks like a crime scene. Let's talk about the technicals. For the traders listening, is this a falling knife or is this a bottom?
The setup is actually what you'd call a textbook capitulation.
Okay, explain that term for people who might not be day traders.
Capitulation is when the last of the weak hands finally give up. It's that moment when everyone who was even thinking about selling finally panics and hits the sell button.
You see it with a big price drop and huge volume.
Exactly. And we saw that. On the day of the drop to 10 cents, the volume spiked to nearly 55 million shares. The average is usually around 30 million.
So almost double the normal traffic.
Right. That huge volume spike suggests the house has been cleaned out. The people who wanted out are out. Now, the stock is testing support right at that 10-cent level. If it holds here, it creates a very solid floor.
And what about the upside? I'm looking at the short float here. It's sitting at 10.21%. That seems high for a stock this cheap.
It is high. It means that over 10% of the available shares have been borrowed and sold by traders who are betting the price will go to zero.
They're betting on bankruptcy.
Essentially, yes. But this creates a very dangerous situation for them, a kind of bear trap. If any positive news comes out, say an update on that Q1 delivery or a new defense contract, the price starts to tick up.
And the shorts start losing money.
And to stop the bleeding, they're forced to buy shares to cover their position. Their buying drives the price up even more, which forces more shorts to buy. It's that feedback loop.
Short squeeze.
A classic short squeeze.
Yeah.
With a 10% short interest and such a low share price, a squeeze could send this stock vertical very, very quickly.
It's like a coiled spring. You just keep pressing it down, and if you take your hand off, it just jumps.
That's a perfect way to put it. And if you look at the momentum indicators, the RSI, the relative strength index, is at 31.65.
Which means?
It means it's basically on the floor, it's oversold. Anything under 30 is technically oversold. It suggests the selling pressure is exhausted, the sellers are tired, the stock is just screaming for a bounce.
Okay, so let's put it all together. We have capitulation volume. We have an oversold RSI, we have a high short float that could trigger a squeeze, and fundamentally we have a production ramp and a defense pivot.
The stars are definitely aligning for a potential move. It is still a high-risk play. I mean, we are talking about a penny stock here, but the risk-to-reward ratio is looking very interesting.
So if you had to put a number on it, what's the final verdict?
Based on the source analysis, the bullish score comes out to a 7 out of 10.
7 out of 10. That's surprisingly confident, given the recent crash.
It all comes down to the thesis. Do you believe the dilution was the end of the story, or do you believe it was the beginning of the next chapter?
Right.
The analysis suggests that the strong catalyst, that ramp, and the defense pivot, they outweigh the short-term pain of the offering. The dilution provided the fuel. Now we just have to see if the rocket actually launches.
So what's the timeline for the listener? If they're interested in this, are they marrying this stock for 10 years, or is this more of a quick date?
It really depends on your style. There is a very clear swing trade opportunity here leading into the Q1 earnings, which will be March or April.
Okay.
That's when the market will expect to see some revenue recognition from the restart. So traders will likely buy the rumor and sell the news around that time.
And for the true believers, the long-term investors.
For them, you have to ignore the daily noise.
Oh.
You are holding for the defense adoption story. That is a multi-year play. If Nuburu's blue lasers become the NATO standard for drone defense, or the auto industry standard for battery welding, then buying in at 10 cents is going to look like the steal of the century.
But that takes patience.
Patience and a strong stomach, frankly. Execution is everything. They have the money, they have the partners. Now they just have to build the things.
No more excuses.
That's the bottom line.
You know, it really raises a provocative question for everyone listening. We so often look at a big stock drop as a sign of failure. But is the market punishing Nuburu for doing the responsible thing, raising cash to build its product, while completely ignoring this massive technological shift that's happening in both manufacturing and defense?
That is often where the best opportunities are found. In that gap between the market's emotional, short-term reaction and the fundamental, long-term reality. The market is looking at the floor. Nuburu is trying to look at the horizon.
We will definitely be watching very closely to see how those Q1 deliveries play out. That's going to be the proof in the pudding.
Absolutely.
That is all for today's deep dive into Nuburu. If you enjoyed this analysis, make sure to hit that subscribe button. We will catch you in the next one.